This is the 2016 Examcraft manufacturing account question. There's a few little interesting things in it, but on the whole, it's not overly difficult. So there are a couple of things you could pop up elsewhere that just be aware of. So question one, and we'll just work through the workings and then we'll slot everything in at the end. So stock on hand at the 31st of the 12th, 2015, finished goods, work in progress and raw materials. Nothing about damaged stock or anything in there, so you can just move on. There's no working associated with that. Working two, goodwill is being written off over a 15-year period. So that's our first one, goodwill written off. Now you write off from cost. So we go up and we see the goodwill from cost is 75,000. We're going to divide that by 15 to find our goodwill written off. And that is 5,000. Next one after that, we have to obviously find what the goodwill is now. So it's not 75 minus 5 because goodwill had already started at a value of 65,000. So it's 65,000 minus 5, which is 60,000. Okay, no real need to do that on a workings page, but just be there for your notes to come. Okay, so working three. Goods which cost the firm 14,000 to produce were sent to a customer on a sale or return basis. These goods were incorrectly treated as a credit sale at cost plus 25%. So if you sell goods on a sale or return basis, the prudence concept would tell you that you should not treat it as a sale. So therefore you have to assume that the sale hasn't taken place, therefore you still own the stock. So the three things that are affected are stock, sales, and debtors. So we'll deal with the sales first. Sales need to go down by by whatever we sold them at. So sales starts off as 1070, and we need to take away 14,000 plus 25%. So just 14,000 by 1.25 is so sales need to go down by that, which is equal to 21,000. Okay, so sales go down by cost plus 25%. That seems quite high. That seems like it's 50%. Sorry, 1.25 it should have been. So that's 17,500. Our sales are going to go down by. Debtors are going to go down by the same amount because the credit sale hasn't taken place. So 61.6 minus 17.5, and that's as if the sale hasn't taken place. Then you have to deal with the stock. So this is one of only three workings that can affect stock. You still own this stock. You haven't counted it because it's not in your warehouse. Therefore, it has to be added into your stock at cost price. So we know that stock is always valued at the lower of cost or value. So the cost price is lower than the value here. So 66,500 finished goods, add on the 14,000, and that gives you your closing stock figure. Okay, so next one. That's sales, stock, sales, and debtors. Next one. The suspense figure arises as a result of discount allowed entered only in the discount account. So we allow discounts to debtors. So discount should go in the debtors account. So the discount was 300. It was only in the discount account, so it should have reduced debtors by 300. So we'll put it there. So now we'll look and see what's happened. This side has gone down by 300, so it's 2582, 300. So therefore, this side is 300 less than the credit side. So the debit side has to go up by 300. So we're going to take the 40,500 for the general expenses. And we're going to add on the 300. That gets it to 40,800. Okay. Number 5, general expenses and a depreciation of buildings are to be allocated 60% to the factory. I'm going to do that last in case there's any more changes to general expenses, and we haven't even worked out what the depreciation is on the factory yet. So we'll come back to that afterwards. Number 4, no record has been made in the books for raw materials costing 20,000 which are in transit. The invoice for the goods has been received. So we've bought raw materials. They haven't arrived in our factory, but we own them. So it's stock of raw materials, closing stock of raw materials has to go up. So closing stock of raw materials starts at 61.3, and then we're going to add on a cost price of 23,500 to those. So now then the double entry then, it's purchases and creditors. So you've bought raw materials for 515,000. You haven't taken into account that you've bought more goods in transit costing 23.5, so you add them on, and you add the 23.5 to creditors as well. So 72.8 plus 23.5. Okay, so that's that one done. So stock, purchases and creditors for goods in transit. Now, the extension to the factory. So during 2015, an extension was added to the factory. The work was carried out by the company's own employees. The cost of their labour was included in factory wages. So this is just a movement from one expense to one asset. Factory wages can only be for goods that are being produced in the factory for resale. So if you've built a factory and the cost of the labour, you use your own workers, it's not added to factory wages, it's added to buildings. So we're going to take that 20,000 out of direct factory wages of 278, and we're going to add it in to buildings. So land and buildings is 850. So we're going to take that 850 and we're going to add on the 20,000. If we read on with that then, the materials costing 23.5 were taken from stock of raw materials. No entry was made in the books in respect of the extension. So purchases of raw materials of 20, sorry, that one there should have been 24,000. Sorry, I took the wrong figure. That's from working for, I just saw raw materials and took the wrong one. So anyway, the purchases of raw materials, there's another 23.5 that need to get taken from that. Okay, so it shouldn't be included in purchases of raw materials, and it should be included in land and buildings. So it's a movement from purchases of raw materials to land and buildings, like so. Okay, so that's that one there. Okay, so you're moving them from wages and raw materials and putting them into buildings, which is what they are. Now, number 8 is our depreciation of machinery working. Now, it's asked in a very strange way, but there's no reason why this depreciation for any of them could, in any question one, couldn't be asked this way. So you just have to take your time in it. So we'll have a read of it. Machinery which cost 50,000 in May 2013 was sold in 2015. So machinery is sold, so you don't have the machinery. So 50,000 gets taken away. So plant machinery at cost is 415, and we're going to take away that 50,000. Okay, so 415 taken away the 50,000 gives you your machinery cost, which is 365,000. What's it say after that? The proceeds of this were 31.7, so that will be in your bank account. It is company policy to charge a full year's depreciation in the year of acquisition, but none in the year of disposal. So the depreciation of machinery, which we go down and check, is 12.5%. Is 12.5% of 365,000 for a full year, because you're not depreciating your machines in the year that you sold them. So therefore you assume you had this 365 for a full year. Don't worry about the one that you sold. So it's 12.5% of 365. Which is 45,625. Now, the accumulated depreciation of machinery will come next. So that'll be your starting machinery from the top. So you've got accumulated depreciation of plant and machinery of 105,000. And we're going to add in the 45,625. But then, as always, we have to take away the depreciation on the machine that we sold. So that's 12.5% of the 50,000 multiplied by the number of months we have it for. Now, because you're depreciating a full year in the year of purchase and none in the year of disposal, it's always full year. So 12 months, 24, 36, 48. So anytime it's given like that, it's 12, it has to be multiples of 12. So in this case, you bought the van in May 2013. So that's a full year 2013, a full year in 2014, and then nothing in 2015. You do not depreciate in the year you sell. So that's by 24 twelfths. So that is 12.5% of 50,000 by 24 twelfths, so by 2, which is 12,500. Okay, and that's what gets taken away from your accumulated depreciation. So we'll end up with 105,000 plus 45,625 minus 12,500. That's 138,125. Now, anytime we dispose of an asset, now I keep forgetting about this in other questions, but anytime we dispose of an asset, we have profit or loss on the sale of disposal. So what we do, we take our value. So the value is what it cost minus its accumulated depreciation. So 50,000 minus 12.5. So that's 37,500. We compare that to the allowance we received, and in this case it's not an allowance you received, it's a check you received. So you received the check for 31,700. Therefore, you received less than what it's worth. So it's a loss on disposal of the difference between the two of those. So it's a loss of 5,800. Okay. So that's that done. Now all we have to do is to check for the net amount. So the check for the amount, which was 31,700, was mistakenly left in an office drawer for 10 weeks and not lodged in the bank account until January. Again, the accruals concept. It should be included in our accounts, even though it hasn't been lodged. So in our bank account, we have 28,700. We have to add in our the amount we've received, which is 31,700 to that, and that becomes the real figure in our bank account. So you have to assume that it should have been in our bank account, or so in all normal circumstances it would be in our bank account. Therefore, it should be reflected in our accounts that we produce. Okay, that's that one done. Which is also, by the way, that plant and machinery depreciation working done. So the next step of our next one. Now, buildings is next. So depreciation of buildings. So it tells us where to depreciate buildings by 2%. So it's going to be 2% of our buildings figure, which is this. So it's 2% of 893,500. Now, it's 893,500 minus the land. So it tells us there was land that it cost 200,000. So it's 2% of 693,500. Which is 13,850. Now, I have a feeling I got a different number when I did that earlier on. Anyway, we'll continue on with that. So, yeah, 13,870. So where am I getting the 850 from? So land and buildings 893,500 and 2% of 693. Sorry. Yes, that's 13,870 there. Now, at that point, right, just because it's fresh in my mind, I'm going to go back and split the cost up 60% to the factory. So the factory overhead, this is from working 5, 50% of that, or sorry, 60% of that is 8322, and the admin, the rest will go into admin. It's going to be 40% of the 13,870, so 5548. Okay, now I'll come back to that afterwards. They're just the ones that are going to go into our answers. Now, when we've depreciation, we would then have accumulated depreciation unless you're revaluing your buildings. In that case, you've got a revaluation reserve. So the revaluation reserve is the accumulated depreciation so far, which is 35,000, plus the 13,870, plus then the difference between the value of the land and buildings at the moment, which is 893,500, and the revalued amount, which is 1.5 million. So you've got 606,500 to add on to your land and buildings. So 606,500 gets added on. Sorry, I managed to turn on the telly there, trying to look at something. Sorry. So 606,500 needs to get added on. So your revaluation surplus then, or revaluation reserve, 606,500 plus 13,870 plus 35,000, which is 655,370. Okay, so that's your revaluation dealt with. Okay, so that's that. Don't mind the land. Provision to be made for debenture interest due. So to find debenture interest due, you have to first of all find debenture interest. So we'll go up and we'll see that there's 10% debentures, including a 50,000 issued on the 1st of the 10th. So you don't have the first 50,000 for the first 9 months of the year. So it's 10% of 150,000 by 9/12. So that's 15,000 by 9/12, which is 11,250. And then the remainder of the year, you have 10% of 200,000 by 3/12. So obviously your month's always going to have that up to 12 there. So 200,000 by 3/12 is 5,000. So in total then that's 16,250, of which the debenture interest due is 16,250 minus whatever we've paid already. So we go up to the question, you'll see debenture interest paid here is 11,250. That gives you a debenture interest due of 5,000. Okay, so last job then, corporation tax, 38,000 to be paid. Now I'm just going to put that into my question. 2 places, trading profit loss account and balance sheet as a current liability. So I'll just be highlighting that on my paper or doing something or putting it in straight away. Same with this goods to be transferred at market value. I'll show you what to do that when we get to the answer. So now it's a case of transferring everything in. Okay, so I'm going to, I don't know, I managed to start halfway through this page. Anyway, I'm going to label where everything goes. So Goodwill is, if it, the rules for this, right, for manufacturing accounts, if they're anything to do with manufacturing, so that would be anything to do with machinery, um, or anything direct factory wages, anything to do with the factory at all, we put them in the manufacturing account. If they're to do with the general running of your business, we put them in the trading profit and loss account. The balance sheet is the balance sheet. It's no different than a normal balance sheet. So we look at goodwill written off. Now, goodwill written off is a normal uh, expense. So goodwill written off would go in our admin. I'll just label them. I'll leave the caps on. Goodwill itself is a fixed asset. Your stock, I presume that was stock of finished goods, I should have written there. So stock of finished goods, remember they're going in twice. Because it's finished goods, it's in the trading account and it's a current asset. Sales is in the trading account. Debtors is a current asset. So they're all things that you're used to. Now your general expenses, which is 40,800, I had to split that up. Okay, so I'm going to split it up now. Now I had completely forgotten to go back to that, but it's again one of those ones I remember reading it. So our factory is 60% of it. So 60% of 40,800 is 24,480. And then our admin will be 40%. So 60% of 4,800 and 40% of 4,800. So that'll give us the 16,320 for that. Okay, so they're the two that we're putting in. The factory, of course, is factory overheads, so that's manufacturing, and the admin will go in the admin, obviously. Stocks of raw materials, again, a closing stock of raw materials. Raw materials suggests factory, so it'll go in the manufacturing and, of course, current assets. Purchases of raw materials will go in the manufacturing. Creditors is current liabilities. Creditors less than 1 year. Factory wages goes in the manufacturing. Now that's a direct expense or a prime expense, all right, at the top. Land and buildings is a fixed asset. Machinery is a fixed asset. And depreciation of machinery is machinery is to do with the factory. So the depreciation of the machinery is also to do with the factory. So that's a manufacturing overhead. Accumulated depreciation goes where it always goes in the fixed asset. Now, you have made a loss on disposal. It's disposal of machinery. Machinery has got to do with manufacturing, so it's in manufacturing as an overhead. If it was profit, I'll show you where it would go, but profits go into manufacturing as well. I will show you where it goes. So the bank will go into current assets because it's a debit. Depreciation of buildings, well, the factory element will go in the manufacturing and the admin element will go into admin. It doesn't actually tell you that it just says to split it up 60-40. So the 40% goes in admin. Revaluation reserve in its normal spot in finance by. Debenture interest in its normal spot in the trading, in the profit and loss in effect. Debenture interest due is a current liability. And again, I'll just write my corporation tax to keep things easy for you. Corporation tax of 38,000. That is because it hasn't been paid yet. It's due, so the full amount is in the trading, and it also goes as a current liability. So then we're left with the stuff that we've haven't changed here. So land and buildings, we've changed it. Just make a note, land and buildings is 1.5 million. I would be crossing that 850 out and writing 1.5 million after if you revalued it, or else changing your land and buildings to 1.5 million here. Okay. Plant and machinery, we've done. Dividends paid doesn't go in. Dividends paid was used, sorry, it does. It goes in the trading account. Selling and distribution, we've been selling and distribution. Sale of scrap materials, manufacturing. The two share capitals are financed by profit and loss. It's a credit, so it gets added onto our profit. Bank, we've done. Three opening stocks. Finished goods in the trading, the other two in the manufacturing. Goodwill, we've changed. Admin goes into admin. Purchases of raw materials has been changed. It's this debenture interest paid we don't do anything with. That was used to work out debenture interest due. So cross that one out as done. VAT is a credit. So VAT is a credit, it's a current liability. Debentures is financed by. General expenses we've split up. Discount is other operating income. Okay. Factory wages has changed, and debtors and creditors have changed as well. So it's a matter of putting everything in. Now I'm going to lash everything in from top to bottom. I don't necessarily recommend doing it this way, but for the sake of answering it and the layout of it, I'm going to uh, I'm going to start up with my opening stock of raw materials. So opening stock of raw materials 51,250. That's obviously from there. Purchases of raw materials. So that's from my answer or from my workings. I'll have to go and find them. So where are you? I've definitely changed purchases of raw materials. There we go. So um, so that is 515,500. Let me just briefly add up the rest of these here while I'm here. All right, that should be them all. So that's 515,500. We take away our stock of raw materials. So our closing stock of raw materials changed, and it was 85.3. That should have been 24,000. Was it? Let me just check that. Bear with me for one minute while I just check the answer. Uh, so 61.3 plus 23. Sorry, it was 24,000 for the stock of raw. I knew I had that wrong. Where is it? Yeah, it was 24,000, not 23. So that's 85.3. Sorry, but I changed that earlier. I changed the wrong figure, so there might be a mistake somewhere else. So minus 85.3. And that gives you your 481,450. Okay, so you've got your prime cost then. So your manufacturing wages or your direct wages. That's from our question. So factory factory wages are 258. Now there's no hire of special equipment, so we'll just delete that. Okay, in a lot of questions there's a hire of special equipment, and that goes in there. So you add on your manufacturing wages, and that gives you your prime cost. Okay, 739,450. You're looking for your factory overheads then. So the expenses we said were factory overheads. So we've got our depreciations of buildings. We've got our depreciation of machinery. And we have our general expenses. And we also have our loss on the sale of machinery. So let's just check I didn't have any other manufacturing ones in. So depreciation of machinery, the loss, depreciation of buildings, general expenses, and then over here we have no other ones. So so we'll get them in. So the depreciation of buildings was 8322. The depreciation of machinery is 45625. General expenses, I'd split that up. All the way up here is 24,480. And then my loss on the sale is 5.8. Okay, so if I add them up, we get 84,227. This is really important. What we're trying to do here is work out the cost of manufacture. So we add expenses. So we're used to taking expenses away, but this in effect is one big working. So we're going to add our expenses on, and that gives us our next cost position, 823677. We add our work in progress at the start of the year, 37.6. And then we're going to take our work in progress away at the end of the year. Okay, and that's 810527. Sale of scrap material. Now that reduces, if we get money in, that reduces our expense. So if there was a sale of scrap material, which I think there is, yeah, 12,000, we will take that away. Because again, that reduces your expense. There was no profit on the sale of machinery. It was a loss. If there was a profit, again, you would take it away because that would reduce the cost of manufacture. Instead, there was a loss. So the loss, you're in effect adding it on by putting it in your factory overheads here. So we take that away and we get our cost of manufacture of 798,527. I'm going to show you this thing down here, which is, you'll see in some of the older questions, which is goods are to be transferred to the trading account at a market value of 825. I'm pretty sure it's illegal to do that. But anyway, you put in profit on manufacture and transfer. Okay, so the transfer is at 825,000. That's what we're going to put them in, transfer to the trading account at, which means there has to be a profit on manufacture of the difference between the two of them. So it's 825. So it's the difference between the 825 and the 798,527 is a profit on manufacture of 26,437. Now, by doing that, that is going to impact our profit and loss account in a minute. Now, if you don't do it, you'll still get the exact same answer because you're not allowed to do what we've just done and you have to take it out in a little bit. Okay, so that's the manufacturing account done. We're on to our trading profit and loss account. Now, the good news is the trading profit and loss account will be much shorter than normal as a result of doing all the other things, doing all this. So it shouldn't take us too long. So anyway, we've got our sales. Now we know we adjusted sales to be 10 something. So that'll be 1070 with an extra zero. So that's 1052,500 for our sales. I'll just make it so as you can see it. Now, opening stock of finished goods from our question, 59,000. Now, at this point, it's goods transferred at cost of manufacture. So we will put in the cost of manufacture figure that we've transferred them off. So 825,000. Okay. Now, where I'll show you this now, I'm going to show you this two ways in a second. The closing stock of finished goods, well, we've adjusted that to be 80,500. So it's opening stock plus, in effect, purchases minus closing stock. Gives you 803,500. And you take that away and you get 249,000. Now, from that gross profit, you then have to add in your profit on manufacture. So your profit on manufacture is this 26473. Okay. So 26473. And you add that on. And that becomes your new gross profit. So now the reason I'm saying to you it doesn't actually matter is that if you didn't do that and you put in this 798527 here and left out this, just if you just watch this now for a second, I'm going to change this to 798527. So just but remember that number there. I'll just actually copy it. So no, 257473. If I just transfer in without doing any of that, so we transfer 798527 and then take out this, you get the same number. Okay, so it doesn't actually matter. You would get the same number regardless. So I'll just change that then to my 825 and I'll stick in my 26473. You'll note that actually I initially put in 850 there, and that's why there was different numbers. Anyway, you always end up back with 275,473. Okay, so you then have to add in your administration expense. We'll do our administration expenses next. So from admin, we've way more than normal. Okay, so I'm not going to have enough room with two there. So we certainly have depreciation of buildings, and we have our general expenses. Okay, now I know them from splitting up our expenses earlier. So for general expenses, it's 16,320, and for depreciation of buildings, it is 5548. Okay, so that's those two. Then we've got goodwill written off. If you put goodwill in as a selling and distribution, don't worry too much about that. That'll be fine as well. That's the 5,000. And then we have, there should be administration expenses here. Yeah, we've administration of 78.2. And it's a good idea at that point to check. There shouldn't be any more admin that we've missed out on. There's not. So we'll add them together. And then in our selling and distribution, we definitely have selling anyway. Selling and distribution 49.5. So that might be the only one. Yeah, so there's normally only selling and distribution, nothing else. So we can add those together, and obviously your normal trading profit and loss account we're going to take those away. Now, from there, have you got other operating income? Well, you do, because we know there's a discount. So the discount allowed, which we changed. No, have we changed it? No, we didn't. The discount is 1,600. That's why I know it's other operating income. It's on the credit side. So we have to add that 1,600 on, and then that becomes our operating profit. Okay, so hopefully that's all worked out. 122,505. Right, on to your debenture interest. Now we've worked out our debenture interest to be 16,250. Which we'll take away. Then we've got our taxation. Remember I said to make a note of that. So taxation is down at the bottom, your corporation tax 38,000, which we'll add on. Oh, sorry, take away. Be great if you could add on tax. And that gives you your profit after tax of 68,255. So then you've got your dividends. There was dividends paid in the question. So remember we made a note of it. It's up the top there. It's 42,000, which we'll take away to get a retained profit of 26255. You have a profit and loss balance, which is a credit balance of 28,400. So because it's a credit, it's a profit, and you're going to add that on. Okay, that gives you 56,655, which I'm really hoping is right for the final answer. Okay, so that should be everything in. Again, you can be ticking off everything as it goes. So just make sure I'll actually do it now. Have we got goodwill written off? Yeah. Stock of finished goods, yes. Sales, yes. Debtors, no. They're done. Stock of raw materials is done. Purchase of raw materials, yes. Creditors, no. Factory wages, yes. Machinery and land and buildings, no. But that is done. Profit or loss is done. Bank, no. Depreciation of buildings, yes. We've got debenture interest, yes. Debenture interest due, no. Corporation tax is in once, it goes in twice, so we leave it there. So we've nearly everything in. You can do the same checklist. You can be ticking off there. So you've dividends paid is in. Your selling is in. Sale of scrap materials is in. Your 3 opening stocks are in. Your admin is in. The venture interest we've done. Discount is in. Direct factory wages is in. So we've got pretty much everything we should have in at this stage, and we're off to do our balance sheet. So normal balance sheet applies, so it doesn't change. So the only thing, we don't have patents here, it's goodwill. So your goodwill was 60,000, 65 minus the 5. Then we're into our land and buildings. Now I know we revalue them to 1.5 million. So we'll just put 1.5 million, 0, 1.5 million. And we have plant and machinery, which had a fairly big working in it. So plant and machinery went to 365,000. So we'll get that in. So 365 will go in here. Now there was accumulated depreciation on that. Not too many zeros there. Your accumulated depreciation on the plant and machinery was 138,125. Okay, which you'll take away. Now, there's no other fixed assets. We didn't mark anything else off as a fixed asset. So we'll add them up and just get into the habit of adding them up. And then don't forget to add on your goodwill. So 60,000 plus your fixed assets. There might be investments in there as well. There's not in this question, but you could have investments which you'd have to put in to add in. And of course, investment income would be profit and loss. Your current assets. So stick in your three closing stocks. So it's the stuff from the bottom. So your work in progress is 5750. Now your finished goods and raw materials both changed. So your finished goods was your raw materials 85.3 and your finished goods is 80,500. So raw materials 85.3 and 80,500. So what other ones do we have? Well, we definitely have debtors, and we changed debtors. So debtors was, we get it in now. Debtors, I haven't actually done that. Sorry. Debtors is 43,800. We had the bank, if you remember. The bank was 60,400. Okay, so I'm not sure if we had any other ones. VAT is a liability. Let me just check my answer here. Goodwill, that's already in. We left creditors liability. Accumulated depreciation is in. Bank is in. That's an asset. Depreciation of buildings is in. Revaluation reserves financed by debenture interest due is a liability. Corporation tax a liability. So anything here? No. So they're all our fixed our current assets. If I know I'm flying through this, so that could be a place where I've made a mistake. If so I'll leave that little space for later on. Creditors less than 1 year. Well, you obviously have creditors. So creditors had changed. It's one of our first workings. It's 96,800. Then you have, just trying to think, you have your VAT of 7.8. You'll have your, that could be it. Let's just check. So creditors is in. You've these two, your debenture interest due of 5,000 and your corporation tax of 38. So 5,000 and corporation tax of 38,000. Now, there's nothing else in on the credit side here. Creditors discount is done. That's in. VAT, I've just put in the rest of the stuff. That's all in. So that should be everything. So add them up, take them away as normal, and add that onto your fixed assets. So 196,025. Now into your finance buy, we've got our debentures, 200,000. We'll have our share capital. So share capital is 850 and 400,000. And remember, do not leave out the authorized. The authorized will be at the top. 5 million authorized divided into 4 million or issued ordinary shares and 1 million preference. You lose a mark if you leave them out. So add them up and don't be lazy. It's 5 million there. You're just not using that that first one. Revaluation reserve, well, we definitely have that. We revalued our buildings to 655,370. And then you also have your profit and loss balance, which is your 54,655, your answer from the first part. So hopefully we'll add up our capitals and then add them to your debentures, and it doesn't balance. So that isn't, just check there. Sorry, 850, 200,000 there. See if that fixes it. Yeah, 196,025. Okay, so that's it done, lads. We'll see you tomorrow with service firms. We'll do another one of those over Easter. All right, talk to you in a bit.